Should I buy a new car before the end of the year? This is a question I get from clients and acquaintances around this time of year. We're getting into November, December, the end of the year. People are starting to think a little bit about tax planning and thinking they may be able to get some nice deductions if they buy a new car. And the truth is, you may be able to get some good deductions if you buy a new car by the end of the year. But the one thing I'd like to point out first is before you decide to go out and spend money on a new car, do remember that you're actually spending money. So you're making an economic decision. And if you need a new car, if your current car is getting a little long in the tooth, got a lot of miles on it, and you really use it a lot for business and you need it, then yes, definitely consider a new car. If you're just buying a new car to buy a new car to get a tax deduction, there may be other things you could buy to create a tax deduction. For example, you may want to upgrade your computers, your laptops, your integration systems. You may want to buy a new piece of equipment if you're a factory owner. So there are economic decisions to consider before you jump in to buy a new car just for the tax deductions. Now that said, the tax deductions that you're able to get are going to depend on the kind of vehicle that you buy. The IRS has a number of different categories, and for our purposes, we'll talk about two of them here. If the gross vehicle weight is 6,000 pounds less, or if the gross vehicle weight is over 6,000 pounds, there are different depreciation schemes. For the under 6,000 pounds, the IRS considers basically any car over the basic car to be a luxury vehicle, and that's the kind of vehicles that most people are buying. And not luxury in the sense of an Aston Martin or something like that. It's just most cars now are so expensive that they fall into the IRS luxury car rules. So if you're buying a car that's under 6,000 pounds gross vehicle weight, your maximum deduction for 2023 is $20,200, which includes first-year depreciation using accelerated cost reductions tables, as well as bonus depreciation. Now, bonus depreciation is phasing down. For a while, it was at 100% up through last year. Now, bonus depreciation is 80 only, and then next year it's 60%. So it's going to keep dropping until it goes away in a couple of more years. So 20,200, but that, remember, is based on 100% business usage. Most vehicles are not used 100% for business purposes. So if your vehicle is used for, let's say, 6% business purposes, then 60% of 20,200 is your maximum deduction for 2023. Now, keep in mind, if you keep the car several years, you'll continue to get deductions in the future years. We're focused right now on the end of 2023, and should you make that buy decision on the new vehicle. Now, the advantage you have if you buy a vehicle that's over 6,000 pounds of gross vehicle weight is that the limitations don't apply. So you may be able to get a much higher depreciation deduction based on the type of vehicle that you buy. Problem is, a lot of folks may not necessarily need a big pickup truck or a big SUV for business purposes and don't really want to drive that sort of vehicle. So it may leave them out from looking at the large vehicles. And if you Google on the internet, you'll find lists in multiple places that tell you which cars are 6,000 pounds and less and over 6,000. So you'll get an idea of what kind of vehicles we're talking about in terms of the gross rate. Now, again, into the business purpose. Again, you can only deduct business usage of the vehicle. That means that you have to keep track of the business miles that you drive as well as the total miles that you drive. That's how you come up with your business use percentage. If you drive the car 7,000 miles for business and 10,000 miles in total, which would include your commuting, which would include your personal usage, then you would have a 70% business usage. One thing to point out here is that commuting miles do not count as business miles. So if you have, for example, an office job, or if you have a factory, let's say, where you go to the factory every day, just driving your car to and from that location does not count as business usage. You would have to then go to a customer or do some other business activity to generate business use mileage. And it's very important, especially with increased IRS audit scrutiny coming about in the next couple of years, to make sure that you do have written documentation for the mileage. Otherwise, the IRS will disallow your deductions, and you'll more than likely be subject to penalties as well. It's hard to keep written documentation of mileage because really that requires every trip you get in the car to document what it's for. There are applications out there that you can download onto your phone, and every time you start your car up, they will ask you, are we doing business or are we doing personal? So it will add up all of your miles, total and business and personal, and give you reports every month and then annually that would tell you how much your business use percentage is. So very important to make sure that you keep the business use percentage as high as possible. And if you're buying a car toward the end of the year, a lot of folks are able to plan to use that car only for business purposes or mostly for business purposes for 23 to get you the most deduction that you're able to get. So those are the overviews of should I buy a new car or not. Look at the economics of it. Is it the best use of your money? And then also make sure that you're going to be able to maintain the documentation to have the business use documented and then support your deductions. And a final note, to the extent that there is personal use of the car, then that is supposed to be included on an employee's W-2 and subject to full withholding. So if you have, in my prior example, 7,000 business miles out of 10,000 total, you may have 3,000 personal miles. So whatever that, there are multiple different ways that you can value those 3,000 miles, but they should end up going on the employee's W-2 and the employee pay tax on those. Now, obviously, as compensation, you would still get a deduction for those 3,000 miles at the business level. However, the employee will have to pay tax on that non-cash fringe benefit. So you may be wondering, when I say a new car, do I new off the dealer lot? Not necessarily. You can buy a used car and get depreciation deductions on that car as well. It will also qualify for bonus depreciation. So you should get, comparably speaking, based on the amount you're spending for the car, the same depreciation sort of deductions for a used car as you do for a new car. And some people like buying a used car much better than they do a new car because of the long-held belief that when you drive a new car off the lot, you lose 15 to 25% of the value immediately. And when you buy a used car, somebody else has already taken that loss of value. And when you buy that car, you're buying it for what is really true fair market value at that time and not going to immediately lose 10, 20% of your value as soon as you bring it back into your garage. So if this has been helpful, feel free to click on the follow button below, and we'll see you next time. Thanks.